Today we're going to be doing a video in a brand new spot. Right behind me, guys, is Biscayne Bay. Over this way you have South Point Park, and then right over there across the water is Fisher Island, which is basically the richest and most expensive zip code in the entire United States. You got to be extremely rich to live over there, and I've never come down here before because usually it's very busy down here and I'm easily distracted. So I'm trying to give you guys important information, and every time I turn around there's something going on. So hopefully I'll be able to get that information across to you guys today without too many hiccups, and we can enjoy this beautiful weather. And the view out here today is just absolutely stunning, as you guys can see. Now, what better place to talk about predatory lending than right over here by the water? It is so beautiful, and I kind of love the contrast of all of this. You have something insane like predatory lending, and then behind me you guys can see the absolute beauty of Miami here. And we're going to be walking past the marina down here too, so you're going to see all kinds of boats and stuff as well. Lots of cool stuff today. Check that out. They do the speedboat rides. If you guys ever come down here, it's pretty fun. Did that before. Now, predatory lending is making a comeback. Just like we've been talking about with different types of scammers and people coming out of the woodwork looking to take advantage of people, the predatory loans that we saw back in 2008 ended up screwing over a lot of people, and now a lot of them are making a comeback. And I don't even know how this is possible because, you know, they made the Frank Dodd laws and all this stuff to try to prevent these things from happening. But I'm sure there's loopholes, and that's how these lenders are able to find their way around these things, essentially. So I'm going to give you guys a rundown of what you could be looking out for these predatory loans, so that way you don't fall victim of this, because as there's a lot of desperate home buyers out there that want to be in the market right now to buy, sometimes people might fall for these things, as well as current homeowners maybe looking to refinance or pull equity out of their home, different things like that. There's going to be all different types of scams to watch out for. So the very first one is high pressure sales tactics. If you're getting bombarded in the mail or phone calls left and right, text messages, emails from a certain lender saying, oh, we have the best rates in town, you know, don't worry about it, just give us a call and we'll get you the best rate we possibly can, run, okay? Because that's always going to be red flag number one for you. And what they're trying to do is essentially get you to sign on the dotted line without reviewing any of the details. And this can come in many different forms, not just from, you know, getting a mortgage. You can have this type of sales pressure put on you for just about anything out there that can be sold to you. So this is just a general good tip of things to watch out for when you're looking to buy something or spend money. That way you don't fall for these things and get taken advantage of right now. And the next big one is excessive fees. So usually how these predatory lenders will operate is they will say, don't worry, there's no upfront costs with your loan, and you know, we'll get you into the property or we'll help you refinance. It's basically going to cost you nothing up front. Well, that's just the key right there, guys. Nothing up front. But you can guarantee they're going to make their money one way or another. So these lenders that are no upfront fee lenders, they're going to get you on the back end, and it's going to be far more painful. And these lenders will usually end up charging you anywhere between 15 to 20% of the entire loan value. So this can end up being a tremendous expense towards your overall cost of borrowing, and people get destroyed by these type of loans. And I would say this is a big one to watch out for, guys. If you call them or you ask them what the fees are and they're not giving you an actual breakdown of what everything's going to cost before you sign on the dotted line, run. So you got to look out for this stuff, because as people get more desperate and the economy keeps making a turn for the worse, you're going to see more companies come out and try to do things like this to people to basically try and steal your existing equity if you're a current homeowner, or prey on desperate would-be home buyers trying to get into a property, not realizing they just signed their death warrant. Now here's the next big one that really applies to existing homeowners, and this type of scam is basically targeting you and your current equity. So say you have $100,000 in equity in your home. It doesn't really matter the number, but you have equity, you know? You have enough equity where someone may want to steal it from you. And you're struggling financially. Maybe you missed a couple of mortgage payments recently. You've been falling on hard times, things like that. These type of lenders will reach out to you, offering you to tap into your home equity, and they know that you can't make the payment, guys. I mean, you're already struggling to make payments on the bills that you already have, and that's how you got into this situation if you're falling behind on your payments. And they'll say, don't worry about it, just lie on the application saying you make more than you really do. We'll push it through, we'll get you the loan for the property. And long story short, the loan has a lien on your property. You can't afford to make the payments. They know that. And what do they do next? They're going to foreclose on you, and they're going to take your property right from under you. So now you're in an even worse position than you were before you ever even took this loan. And this next one is very similar to the previous one and also targets existing homeowners, but mostly senior citizens. You're talking people that probably have a paid off home and they're very equity rich, but they're living on a fixed income and they're struggling to make it financially, so they're very susceptible to these type of scams. And what they'll do is they'll contact you saying, hey, you can pull some of that equity out of your home and we'll give you some cash as well, so that way you can have some money to pay the bills and do some fun things again and live a little, right? But once again, these loans are always attached to your property, and the moment you can't pay, they're going to foreclose on you, and you can end up losing everything and not be able to have a place to live anymore, or lose what you worked for your entire life. But you know, the easiest way to avoid all this stuff is to just talk to somebody that you know and you trust. You know, talk to a mortgage broker that's referred to you by a friend that already, you know, closed on a loan with them, or go to your bank. You know, I personally like mortgage brokers better than going to your bank, because the bank is going to have a very limited number of loan options for you, whereas if you go to a mortgage broker, they're going to have hundreds of different options for you, if not at least dozens to choose from, and usually get you the most favorable terms on the type of loan you're looking to do. And then of course, a lot of people like credit unions as well. That's also a great choice. You know, join a local credit union. They usually have some of the best rates in town, and of course they're legitimate and can be trusted. So if you're getting stuff like this in the mail, if you're getting these text messages, these emails, phone calls, whatever, ignore all of it, guys, because there's a high probability that it is some sort of scam, and if it's not a scam, they're looking to take advantage of you right now. Now the next thing, and probably is going to be music to your ears as it is mine, is that we're pretty much at a stage where this is the death of the iBuyers, guys. And if you don't know what iBuyers are, you can think of companies like Redfin and Open Door and Zillow Offers, these companies that would, you know, send out these ridiculous offers, buy your home sight unseen, and thinking that they can just turn around and flip it for a profit a month later and, you know, take full advantage of this crazy cycle that we had in the housing market. Well, obviously that didn't work out too well for Zillow. They already folded up their operation last year, and earlier this year, Open Door announced they lost $1 billion just in the third quarter alone of 2022, which is unbelievable for any type of company to lose that much, let alone a publicly traded one. And it's no wonder their share prices are down over 90% from the beginning of the year. These type of companies that operate on this have no business model, guys. Their business model was to flip fast, okay? And those days are over. That market is gone, and probably for a very long time. And so now all these iBuyer companies are either finished, or they're trying to look at ways they can restructure their business to hopefully try to survive this housing crash. So basically, this entire thing was one big experiment that ended up being a complete failure. They ended up losing miserably, a ton of money, and now they're at the point where they're trying to just stop the bleeding and stay in business. So they're trying to pivot to things like property management, or just being the listing agent for the house, you know, basically trying to take the place of your average everyday real estate agent for lower fees, things like that. But I doubt that's going to work, because their entire business was built on a failed model, essentially, and who would trust them? You know, like if you're Open Door or you're an investor, we're going to give these guys money to try something new this time. Oh, it didn't work out last time. Let's give them some more money and hope for the best the second time around. No, I wouldn't be doing that. You know, I'm not going to be giving these guys any of my money. These guys deserve to fail, you know? And that's one of the problems that we see often today, is that so many companies get bailed out by either private investors or the government or whatever. And capitalism is the opposite of that, guys. If you fail, you fail, you know? If you fail, you fall down, you pick yourself up and you try again. And, you know, hopefully you'll have better luck the next time. But it shouldn't be up to the taxpayers or anybody else to, you know, bail people out of these financial problems that they create for themselves, like these iBuyer companies. And right now, the way things look is the Phoenix, Arizona housing market is going to get hammered by this situation the most, because in just Phoenix, Arizona, just this one city, iBuyers hold about $1 billion in housing inventory in this area. And that's why you're starting to see the amount of listings completely explode in Phoenix. And these guys are being very aggressive trying to cash out before it's too late, guys, because they know that the housing party's over and prices are going to continue to decline. And they're being so aggressive with their pricing strategy where every single week slashing the price by 2%. So imagine, guys, 10 weeks go by, no sale, that's a 20% discount already. If you don't call that a housing crash, I don't know what is. The fact of the matter is, this isn't happening everywhere. It's not like that's the situation in every city across the country. It's certainly not the situation here in Miami. And so that's what makes people think, well, none of this is happening, you know, I don't see it happening in my backyard. Well, it's not happening here either, you know? But that's not the point. The point is it's happening in some areas, and some places are really going to see some fallout from this. But just like we talked about in the pros and cons of the economic collapse video, people need to recognize the opportunities in this. And right now, the opportunity in Phoenix is a lot of new listings. So if you're a local and you know the market well, you can easily recognize when something comes up that's a pretty good deal, or something that you know you can buy as an investment that will cash flow right now. And that could be an opportunity, guys. I'm not saying go out and buy, you know, a bunch of these Open Door listings, because there's going to be a lot more of them coming into 2023. But start looking at them and figuring out, you know, which ones could be a good opportunity, because at the end of the day, these guys just want out. And the longer they hold on to these properties, the more desperate they're going to get. That's a guarantee. And even these companies have admitted themselves that they're going to keep lowering prices until it meets home buyer demand. So they're going to do whatever it takes to get rid of these properties. They're already writing them off as a loss, guys. So you got to look at things like this as an opportunity rather than a bad thing. And that's how I like to look at everything in life in general. So as much as a lot of these things can sound pretty scary, there's always opportunity in all of it. Now there is one new company that sounds like at least they have good intentions and they want to try to help people out. Of course, the goal of every company is to turn a profit, but the idea from this sounds decent. And what they want to do is they're saying, because we have 15 million vacant homes in the US, they want to try to get their hands on some of them. And the name of this company is called New Western, by the way. So their idea is, we're going to buy some of these vacant properties and we're going to rehab them, because people don't want to do it. You know, most home buyers, especially first-time home buyers, don't want to get into a complete renovation job. So they're going to get in those properties, cheap prices, you know, completely renovate it, and then of course sell a turnkey property to the end user who just wants to move in. Now, the idea on the surface sounds noble, but only if it's done right. You know, if they do these very fast, cheap fix and flips like Zillow was trying to do and things like that, they're gonna fail as well. And that's just it, guys. You know, companies that don't operate with integrity deserve to go out of business right now more than ever. So if these guys want to help, fine, help. But don't expect people to be falling for your rip-off scams or buying your property that was a $15,000, you know, drug shack, and now, you know, you put 30 grand in it and now all of a sudden the house is worth 300K. So if they think that's going to work, it's not going to. So we'll see what they end up doing with this. But in general, I think the whole iBuying business is completely finished. All these companies are going to be either closing their doors or completely pivoting to a new type of business under the same brand, or maybe rebranding themselves altogether to probably hide the shame from all of this on how much money they've lost. I think the overall concept would still appeal to home sellers. I know some of you told me you sold your house to Zillow or Opendoor or whoever, and it was a pretty good experience. And it's always great for the home seller because it's a fast, easy transaction. And if you feel like you got a fair price, great. But then they're trying to turn around and rip off the next buyer. They're clearly seeing that that's not going to work. Now, the credit company TransUnion, they just released a forecast for 2023 saying that credit card delinquencies are set to go up roughly about 20% next year as more people are relying on credit cards to pay their bills. They're also predicting that delinquencies and defaults on personal loans are going to go up as well. They're saying that the factors that are driving these issues are inflation. People can't afford things anymore. That combined with layoffs, people are losing their jobs, and when you're living paycheck to paycheck or have a shoestring budget, all it takes is that layoff and boom, you can't pay all your bills. So people are turning to these personal loans and credit cards. And so TransUnion is predicting that credit card debt next year is going to go up almost 2%. And the ending credit card debt balance by the end of 2023, they're projecting is going to be about $934 billion, guys. That's pushing $1 trillion, which is just unbelievable when you think about it, that people have that much credit card debt right now. And the other thing that's going to happen from this is as this recession takes full root into our society right now, a lot of these credit card companies are going to start severely tightening up the amount of credit they give to people. So not only will the amount go down, but the stringency on the borrower itself is going to go up. Meaning if you don't have good credit, good luck getting another credit card or getting a credit increase or anything like that. They might even start shutting your credit cards down if it looks like you're at risk and you're not going to be able to pay your bills. So a lot of things like this are going to start happening, and you can pretty much guarantee that if you don't have good credit and you have a credit card company willing to give you a credit card, it's basically a predatory loan, guys, just like we talked about in the beginning, because what they're going to do is they're going to give you just a little over the limit of what they think you can pay back. They're going to issue the card, and they know you can't make the full payments, and they're going to be saddling you with probably 30% interest rates. So get ready for that. And I'm sure the next thing that they're going to do is they'll probably make it so you can't get out of this from bankruptcy anymore, to really keep people on the hook from all this credit card debt, because the numbers are going up too much and people can't afford to be subsidizing this anymore. In this report from TransUnion, they did a survey, and 53% of all Americans that they surveyed are going to be looking at applying for a new credit card next year. If you don't have good credit, guys, like we've been talking about, I've been telling everybody on the channel to stay out of this credit card debt and to keep a good credit score. This is when you're going to start being rewarded by all of this, because as the economy tightens up, only the responsible ones are going to get rewarded from this, and the people who have been living on the edge are going to get completely burned. Here's an interesting story out of Florida, and something that we've also covered before, is what's going to happen to Southwest Florida in the region that got hit with Hurricane Ian, the place that got affected the most by the storm. A lot of people thought that everyone was going to abandon the area. It's too risky to live here now, and we're all just going to get out of here because it's too scary to be here. When in fact, it's quite the opposite, guys. In fact, look at this. For each homeowner looking to move west of US 41, which is basically a highway that divides, how close you are to the ocean over there, for every one person looking to move out of that area, there's 2 people looking to move in. So this is pretty clear that it's one of those things that unless it happens to you, you'll never really understand what it's like to go through a hurricane, or to lose everything from one, or be homeless for months on end, things like that. So I feel like that's what drives this, and it's pretty apparent that this is always going to be the case. Doesn't matter how bad the disaster is. If it's in a desirable area like Southwest Florida, you're going to have people come in and buy up that real estate and just think that, well, it's not going to happen to me. Because the report from this region says that usually home sales slow down this time of year like they usually do every other year, right? But in October, in Southwest Florida, the closed home sales went up almost 24%, guys, which is highly unusual for this time of year. And what this is attributed to is the amount of people coming in and buying up these properties that got completely wiped out. Of course, the locals who are in the area, especially local real estate agents, are psyched about this because they're going to be able to continue making money and business is going to go on as usual, which is good for them and the local economy. But what this is going to do is it's going to trigger a building boom in the area, and they're going to be rebuilding homes at a much higher quality or standard to withstand future storms. And right away you might say, well, that's great, and it is, but guess what? That comes with its consequence of a price tag that's probably going to be triple whatever the old house used to be, maybe even more than that. You know, if you had a waterfront home over there that used to be $1 million, count on the new one being 3.5. When you factor in the cost to rebuild a new home like that and up to the new code, up to the new building codes to keep this place standing during a storm, as well as all the labor costs that have increased and everything else like that, the developer's profit that they're going to want to make, you can guarantee that this area is going to become for the elite only. Just pretty much like where we're walking right now. I mean, you got to be super rich to live in one of these buildings over here. Everything is over $1 million now. Because it's not just the amount of sales that have increased in the area, it's also the sale prices too. You're talking median sale prices in this area going from $450K to $555K in just a year. So that is just astonishing, guys. And to be honest with you, it's another one of the reasons why me as a local, I don't really want to be involved in investing in real estate here anymore. I know there is possibility in that and you can make a lot of money, but you got to be lucky, you know, and you got to really know what you're doing with that. And I don't like relying on luck when it comes to investing in real estate. I'm more about the slow and steady approach, you know. I'm going to just buy properties that cash flow and people can afford to live in. There's jobs in the area that people can afford to rent for without being completely gouged every month. And the fundamentals make sense. And you pick up several of those over the years, and next thing you know, it's enough to fund a retirement. That's my method with it. People can do whatever they want. You know, clearly that's what a lot of people are trying to do down here in Florida right now, is just to get rich quick. But that's not really my style. But clearly there's opportunity for that here. And it's one of the things, like, even though we talk about the housing crash and this and that all the time, there's a possibility that in high demand areas like this, like Southwest Florida, like Miami, like Tampa, might not see a housing crash. You know, we don't know. And if the demand stays high, we're not going to see a crash, guys. But you got to remember that everybody wants to be here now. That seems to be the case more than ever before. Everybody and their mother wants to be in Florida. And I see all the time people writing in the comments, you know, my plan was to move there and retire there. Now I can't afford it. Now I'm looking at staying wherever I'm at or finding a new place because it's just out of my budget now. So unfortunately, that's the new reality. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I put out a new video. And if you don't want to wait, check out my next video on the screen right over here, and I'll see you in the next one.